Are small cap stocks and high growth stocks about to make a run? Stay tuned. You really don't want to miss this one. Hey guys, in today's video we're going to be talking about small cap stocks and high growth stocks and why we think that they're about to make a run. Okay, we're going to discuss give you a couple of examples on why they're showing a similar pattern and why we think that small cap and high growth stocks are about to make a nice little run here. Why we think it's going to happen. So we want to start off with showing you a couple of patterns that we've seen in high growth stocks, and it's kind of the common occurrence with a lot of these companies. A lot of these companies are oversold at the moment, okay? And if you want to compare this to other companies in the S&P 500 or large cap companies, a lot of those companies are starting to become overbought. So basically, I think that we're gonna step into a rotation out of the large caps, out of the banks and stuff like that, where a lot of these companies are starting to be overbought. In other words, prices are starting to go up on those companies, and I think investors are going to look for an opportunity to invest into something that has been marked down by a substantial amount. As you know, within the last 3 months, a lot of these high growth plays, a lot of these Nios, a lot of these Palantirs stocks have been shot. Okay, within the last 3 months, we've seen a common occurrence in all of these plays, and I'm going to show you a couple of them and show you the graph patterns on them, and that way you can see and get an idea of what I'm talking about here. Let's step into this. First company we're going to talk about is Nio, and if we go to the 3-month chart on Nio, okay, you're going to see that back in February, Nio reached all-time high of 62 bucks. Ever since $62, they've ran all the way down, and they've hit a couple of marks here that I found really interesting. Okay, right around March they hit a mark of 35, and if you look at different dates after, during the month of March, they hit it again on March 29th, then they hit it again on April 15th. So they triple bottomed. They bottomed right around the same spot, okay? So that's holding as a strong support line for Nio. Pretty much indicates that Nio, when it reaches 35, that's a strong bottom, strong hold. Doesn't mean that Nio cannot go lower than that. Any stock could break supports, okay? And they could go lower. But it's showing you that within this 3-month period of time, it's hit the 35 and ran up. It hit the 35 again, ran up a little bit, hit the 35 again, and ran up a little bit again. So it's kind of showing you that 35 is a strong hold for it. And that's why it's giving me an idea that, you know what, it's starting to, I think it's going to start within the next couple of weeks. You're going to start Nio, start pushing itself upward, okay? Let's take a next stock here. Next stock is Palantir Technologies. Kind of the same play here. If you see back around February, same thing. Reached a high of 38. Ever since then, it's came down, and there's a particular number here where it keeps touching, which is right around the $21, $20 to $22 level. Okay, here on March 8th, it hit around 22 bucks. Then we jump over to 21 on March 24th. We hit it again on March 29th, 21. It goes up. Then we hit it again here on April 20th, and it goes up. Triple bottoming again, okay? So it's indicating that $21 level is a nice support for this stock. Anytime it gets close to that level, you want to buy, pick up shares. Once again, does not mean it cannot go lower than that. It can always break down lower. And for more information on this stuff, remember guys, we constantly say it on here. Follow us on Twitter at InvestingOG. We call out plays all the time, so if you want to get like up to the minute plays, sometimes these videos take a little longer than we want them to take in order to get them out. But for latest information, follow us on Twitter at InvestingOG, okay? Let's look at the last company we're going to be looking at. Let's look at Fubo, okay? Same kind of example. Back in February, hit 52, came down, and then we started looking here a couple of points right around 20, and then it hit the low here 18, and it bounced up. So this one hasn't touched the bottom yet, and I think it still needs a little bit more to go, but it can take off from here, okay? But it's getting right down the bottom, a strong support right around the $18 level, okay? $18, $19 level. Now, why do I say we are gonna make a run? Is real simple, guys. A lot of these plays are oversold. That means sellers have been selling them. Large institutions need to always rotate their money. So in other words, when you have currently the large cap and the Dow reaching all-time highs, so then large institutions will get to a point where they say, you know what, it's not worth for me to buy whatever it is, Google at $3,600, because I now have an opportunity of buying Palantir, for example, at 20 bucks, right? So they're going to want to shift their money out from plays that already ran up to plays that are been getting hit all the way down, and they're pretty much leveling off. So that's one reason why I think that the rotation is going to start coming in to small cap and high growth plays, because those are the stocks within the last 3 months that have been getting hit the hardest. Okay. Second thing, I'll give you an example. I'll show you the same thing. Now, Wells Fargo is a bank play which a lot of people were putting money into a few months back, and they still are, don't get me wrong. But if you look at the 3-month chart, you'll see the opposite. Now, if you can tell here, you're seeing an opposite chart. Usually with Fubo, you were way up here at all-time highs and they went down. Here you're going from lows and going up. So you can see in this chart that from 3 months ago, all it's done has been going up. Eventually it'll top out and start going down again. But people have been putting money into this because it's more of a safer play. It was shot down back 3 months ago. Wells Fargo was. I'll show you another one. Cheesecake Factory. Money was going to start going into the retail. Money was going to start going into the restaurants. But why? Because they were opening up again, right? So you see here that Cheesecake Factory, right around the same time when Fubo and Palantir were making all-time highs, well, Cheesecake Factory was pretty low. It was right around $43, okay? And since then, it's gone up all the way to what we're trading at now, 57, and it even reached a high of about 62. So these plays have ran up, and there's going to be a cool-off period where they start coming back down. So that's why I'm saying that since a lot of these companies have ran up, high growth and small cap have gone down. Therefore, institutions, the smart money, these guys are not stupid, guys. These guys are pretty smart. They want to take their profits, pull profits, put it into an investment that is 60% knocked off, 70% knocked off, and watch that grow. And once that grows again, guess what they're doing? They're going to pull that money out again and put it into something else that's 50% off, 60% off, and that's how you do the rotation, guys. It's like kind of like when you go to a Target. Target will have their, right now we're gonna barely start summer, right? So as summer starts, guess what, guys? Target is gonna be shifting out their whole catalog. They're gonna start taking out all the summer clothes, and they're gonna start putting what? They're gonna start putting winter clothes, right? Because they want to be prepared for the winter. They don't want to have excess clothes out there. They don't want to stay stuck with inventory. They want to rotate it out, make sure they have the winter clothes in, and that way people can start buying winter clothes in the summer. They always want to stay 2 steps ahead, guys. And on this channel, we've taught you and we've showed you multiple ways where you could stay 2 steps ahead. Okay, so if you do have money in large caps, if you do have money in these rebound plays, stocks in these rebound plays, the retail plays, all that, and if you are up on them, my suggestion, remember, this is not financial advice, only my opinion, is that you pull some profits and hold that money and have capital ready to purchase any other company that's kind of been shot down along the way. Okay, last thing that I want to touch on this video, very, very important, okay, the VIX. Okay, if you look at the VIX, make sure you always have the VIX indicator on your screen or somewhere around it when you're making trades, because if you look at the VIX, you always want to make sure that the VIX is right around the $20 level, either 20 or below. It could always go up like 21, 22, but you want to be around 20 or below. That's the perfect indicator to show you what kind of run this can make. Anytime you see these high points here, if you look back at the market on January 27, 2021, I can assure you that that market was a red day. That day was a red day. You can look at any of these high points and I can assure you anywhere around there, it was red days, okay? So make sure you're watching, always have your eyes on the VIX to make sure that your money is being protected. This is a good strong indicator, one that we use here. And right now currently it's at 17. That's the last reason why I think that the market is gonna make a little bit of a run here. So with that, guys, I'm not gonna take this any further. I just wanted to show you this, and I think whoever's been holding these companies like Skills, like Fubo, I think you're gonna be in for a good run up and coming. Okay, with that, guys, thank you guys so much for watching. Remember, if you found any of this information informative, please like and subscribe. Also, make sure you hit the notification bell. That way you get notified anytime we make a video. With that, guys, have a great day, and I'll see you on the next one.